It's day 24 and counting of the government shutdown, and Wall Street is starting to raise warning flags. Here's what Delta Airlines CEO had to say earlier today.
We're not taking sides on the debate, but we need to get the business moving again. One of the other issues to us is that we're seeing a reduction in revenues in the month of January. Not huge, but about $25 million due to the fact that government contractors and some government officials are not traveling the way they would anticipate because of the shutdown.
Also, J.P. Morgan CEO Jamie Dimon warning of the economic ramifications on the company's media call this morning, saying we need good government policy to help the economy, and the shutdown is not going to help the economy. Someone estimated that if it goes on for the whole quarter, it can reduce growth to zero. So we haven't seen much of a direct impact yet, but will the shutdown eventually reignite stock market selling at this point, Grasso, in the cycle?
So I think the shutdown is a tradable event. I think that all these, granted, this is the longest one in the history of our country, but ultimately it's going to be a buyable event once it really gets cleared up. I know that there looks darker and darker like Snap, but I would eventually.
Wow, that's quite a parallel. I hope we're not in the same situation.
I mean, it feels like Snap. It feels like people.
But you know what's really funny is that I thought J.P. Morgan was the one. Was he being facetious there? I thought J.P. Morgan was the one who came out with that report that said that it was going to take a shave off of GDP. So I don't think it's going to be as dire as people think it is.
All right. Our next guest says the government shutdown is just a sideshow. It won't really derail this rally. Let's welcome back Joe Zidle, who was just named Blackstone's chief investment strategist just yesterday, right?
That's right.
Congratulations, Joe.
Congrats.
Chief
Well done.
investment strategist. We had no idea. Okay, so what's fascinating to me is that there's so many economists. Oh, you're wearing matching ties. That's cute.
We're brothers.
Very nice tie. We're brothers from another mother.
Yeah,
So many economists venture out and say, oh, it's going to have this impact, 0.1% on GDP for every week that goes by or whatever it is. Those same economists came out and were so precise in terms of the impact of the tariffs on the U.S. economy, which turned out to be not quite right in that they looked at it in a very narrow way. They didn't also calculate the ripple effects, right, the impacts on sentiment, the impacts on business spending, the impacts on consumer spending and sentiment. So how do you view this shutdown?
Well, the first thing I'd say is we don't want to make light of the impact that this is going to have on any one individual, because there are 800,000 people who are, going without pay right now. So from an individual perspective, I don't want to discount that whatsoever. But to put it into the broader perspective, the workforce in the United States is 161 million people. So we're talking about 0.5%, 50 basis points of the workforce that's being impacted here, but they can file for unemployment claims and other things. So I don't see any real lasting effect here, because people are going to get paid and they're going to be made whole, which is a completely different issue than what we're seeing, in something like the trade war, where you do have to consider those second and third order effects. Because what's going to happen is when the government shutdown is over, people are going to be made whole on their paychecks. So if we do see a drop to first quarter growth, or if we see some sort of hit to corporate profits, I think the second quarter, we're going to see all that coming back and more.
So, for instance, if somebody's not going to spend on a vacation or not going to spend on a meal or sweater in the first quarter, they're just going to do the same thing in the second quarter?
Yep, maybe they end up postponing a lot of those purchases, right, or things like that. But, these are also the worst case scenarios, which it's fine to project that out because we don't know, and uncertainty is going to be the enemy of growth here. But that's assuming that this shutdown does not end. And I think there's a lot of things that could bring it to a conclusion, and one of them is pain points. And the moment we start seeing those pain points at TSA, check lines and other areas, I think it's going to incent both sides to figure out some sort of solution.
We may be getting to that point. Joe, you think there's a rally on our hands. So how high do you think we'll go in the markets? And what could derail it? I mean, if there was the one thing that you, as the chief investment strategist of BlackRock, could point to, Blackstone, point to and say, hey, this is what could derail it, what would it be?
Well, it is first and foremost the trade war, and I think we need to get that wrapped up in order to have any type of meaningful rally in the stock market. Now, I'm bullish. I think that the market is going to be up 15% in 2019. That was in our 10 surprises that we put out on January 3rd. But even a 15% rally from the end of the year only gets us to about 2875 on the S&P 500, which is still below the September 20th peak. So, we do look for, we are bulls. We think the market's going to head higher. But the trade war is the one thing that's still holding us back here. And I think it's an area of concern that's got to get resolved. And our view is it does get resolved sometime, in the first or second quarter. Brexit, those other things, again, I think it contributes to, policy uncertainty. But if there's a silver lining to the policy uncertainties, it probably keeps central banks more dovish. And that was a conversation you and I were having offline a little bit earlier. If you look at the Global Economic Policy Uncertainty Index, it's at an all-time high right now.
Oh, really?
So what does that mean? It means central banks around the world might simply just be more dovish and more tolerant of some of these inflationary pressures and tight labor markets that we're seeing.
Which is good for your odds of a 15% return.
Sorry?
Which is good for your odds of a 15% return in 2019.
Absolutely.
Joe, great to have you with us. Congratulations once again on your new title. Very impressive. Joe Zidle.
JC. See, if I worked with Joe, I'd call him JC every day, right? I mean, that's what I would do because that's the way I roll. So 2,900. I mean, I can do math because I have my application on my iPhone, and to get to that number, 17.5 multiple earnings have to be S&P 500 earnings have to be about $165. I don't know. I mean, it seems like a stretch to get there. Now, you can maybe argue that the multiple should be higher, but I don't know why in this environment the multiple should. So it's aggressive. I'm not saying he's wrong, but it's hard for me to wrap my head around that.
I think the key really is also the negative feedback loop that's been, at least for the short term, been broken by the Fed stance. And we've had reaffirmation today. In fact, Esther George, who's somebody else that you could have heard be very, very hawkish, seemed to take a step back and just add some consistency to the Fed tone here. So while I do think S&P earnings are going to be under some pressure, at least relative to the 7% growth that's targeted, to me, it does feel like the market is still trying to short cover. It does still feel like the pain trade is actually higher for the S&P, even though I don't think it needs to be a straight line here. And I think we're at some key resistance.
I think the idea of the resolution in terms of trade war, that is huge, obviously. And the resolution in terms of the government shutdown. I mean, that combination itself, and last night we talked about it. I think 20% was way too aggressive in terms of the analyst last night that was sitting next to me. 10 or 15% makes a lot more sense to me, though, right now. When I look at 15%, that doesn't seem like an extraordinary number if we can get these things resolved quicker, though. It needs to happen very soon.